Cathie Woods went shopping this past week. I noticed that she bought a bag of Ginkgo Bioworks holdings. In particular, she bought about 3 million shares for her ARKK fund and close to 350,000 shares for her ARKG fund. Now, this article is coming from Market Insiders. This article is actually older, goes back to October of last year. Cathie Woods keeps buying Ginkgo Bioworks stock, and I was interested more so trying to find out what does Ginkgo Bioworks do. But this company was founded by scientists at MIT. Okay, that's a good start, right? Ginkgo is engaged in genetic engineering that produces bacteria which can be used in industrial applications. The company has been valued at as much as 4.2 billion. However, this stock ticker. DNA stock has declined 61% this year and fallen 69% since its market debut in 2021 via a reverse merger with a SPAC. All right. Okay, genetic engineering produces bacteria for industrial use. That doesn't seem exciting. But so I dove a little bit more, and this is where the light bulb went off for me, or went on. All right, so this article is coming from L Finance by way of Tip Ranks. Cathie Woods gets back on track. All right, this article is coming from January. And here's the kicker. Innovation, you say? Well, Ginkgo Bioworks is a good place to start, touting itself as the organism company and likening DNA to computer code. The company's synthetic biology. Okay, that's the key word. Synthetic biology. A platform is designed to allow the programming of cells to be as easy as programming computers. The objective is the company's cell programming platform to facilitate the growth of biotechnology across a host of different markets, from pharmaceuticals to food to tech to cosmetics. All right, here's the other one. Here's the keyword. Synthetic biology is the fast-growing emerging segment with a myriad of use cases between 2030 and 2040. The bioengineering products, this is it, another keyword. Used across different end markets, the company anticipates an aggregate of roughly 4 trillion yearly direct economic impact. 4 trillion. This is it. This is why I need to put this on my radar. Now, I mentioned she's been buying in more shares this week, but looking at her pattern, she's been buying not just last week. She's been buying since August of 2021. And you can see that she's just been, you could say, dollar cost averaging, right? Because as she initially purchased back in 2021 into 2022, prices have declined, right? It had a high of 14, and it is now down at is that right? $1.35? Or is that her? Yeah, okay. Wow. All right, so it went from $14 to a buck or so. And this fuchsia color is her average cost per share, which would continue to go down if she continues to buy shares, which I anticipate that she will. This is just kind of showing increments of when she purchased the stock. Q1 of this year, average cost was $1.58. Q4 of last year, average price was $2.30. Q3 of 2021, average price was $12. Again, her average cost right now is roughly $10. Her position's worth $203 million, represents 1.5% of the total equity. She's the 21st largest holder. The investor owns 10% of the outstanding. All right, this is a little confusing here. Current holdings, 203 million. Okay. It represents 2% of her portfolio. Ginkgo Bioworks is the 21st largest holding within her portfolio. She owns roughly 10% of the outstanding shares of Ginkgo. Her investment thus far, I got it. So she's purchased over the last couple of years roughly $1 billion in share because of the $14 to $1.35 price. Her $1 billion is roughly a quarter of $1 billion now on paper. All right, so let's just go to the chart. This kind of hurts, huh? All right, so this is when you had this back deal. Again, helicopter money came into effect. Power said, wait, inflation is transitory. Oh, nope, it's not transitory. We got to put on the brakes. We're going to raise interest rates. Helicopter money disappeared. Liquidity dried up. And prices just collapsed. All right, so looking at the monthly chart, the last major sell level was at $2, which is also serving as support resistance. All right, so $2 becomes your first target. Price is at 123. However, current candle, it's mid-May. You have an indecision candle thus far. I'm not sure how this month's going to end. So, indecision's good, right? And it's a battle between the buyers and sellers. So potentially you get a pause. Let's just turn this off for a second. All right. The March candle is the candle in control. And what I mean by that is that the April candle closed within the high and the low of the March candle. And so far, the May candle is has a closing price in between the high and the low of the March. Let me do orange. Orange. So the current candle, which is May, right now has a close in between the high and the low of the March candle. Candle in control means that if we get a close above, let's just put some markers. So if we get a monthly close above 148, that signifies that price is going to move higher. However, we get a close below 114 on the monthly chart, that signifies that price is going to go lower. That's the candle in control. Again, upside is limited to $2, but still would represent roughly 100% return. All right, we're going to go to the weekly. You can see that it's just making low highs, low lows. All right. However, since March, it's been basing, right, which is a good thing. Could be potentially a what they call an accumulation phase or level. For example, Cathie Woods, she's accumulating. All right, let's go to the weekly chart. It's just sideways action. This yellow line represents the 200-day moving average. Coincides with the resistance, coincides with the upside target of $2. On daily chart, you can see you have support, which is now resistance. Again, on a daily chart, we need to see a close above this level here to say that, okay, it's time to, it's safe enough or confirmation enough to get in, as price actions indicating price is going to move higher. Another indication is when these moving averages start pointing up. So they were pointing down, they have leveled off. You got a kink. Maybe they are turning up. Maybe you will see something like this. So maybe we're talking September-ish for a break. Seems about right. The Fed's probably not going to raise rates any longer. May have a pause. We'll go into recession. We'll start to lower rates later this year. And then helicopter money starts falling out the sky. So let's put a little horizontal bar here. September. This is what I anticipate getting a break above the 150 level on the monthly chart. But it's not a bad idea if you are convinced or have some conviction to, if you believe in the synthetic biology, you believe in Ginkgo, you believe in Cathie Woods, it's not a bad level to start dollar cost averaging in. Thanks for watching. Subscribe. Please like the video.